In this video, we're talking about the top 5 Q&A that I get most frequently when it comes to selling your house in a divorce. What's up, everybody? It's Cassandra Lopez with the Bremerton Broker channel. If you're new to the channel, you're going to want to go ahead and subscribe. This channel is all about divorce, probate, and real estate investing. So if you fall under one of those 3 categories, be sure to subscribe and tap that bell so you're notified every time I drop a new video. And you can reach out to me directly. This is my cell phone and my email, so be sure to chime in if there's anything I can do to support you. Look forward to seeing you on the channel. All right, question number 1. Can a judge order the sale of a marital asset, i.e. your home? And the answer is absolutely, with a resounding yes, a judge can order the sale of your home. So this usually happens if the 2 spouses who own the home together cannot agree on what to do with it. One wants to keep it, one wants to sell it. They both are fighting over who's going to keep it, et cetera, et cetera. And then a judge will just get involved and say, look, you guys can't agree on it, so I'm just going to make the call, and he's going to do usually what is the most equitable solution, which is to sell the asset and split the proceeds. Question number 2, can I keep a house during a divorce? And the answer is also yes, but that depends on several factors. So the 2 spouses need to come together and agree on, first of all, who's going to get to keep the house. And if the person who gets to keep the house can financially support the payments and the maintenance and all that stuff. So if the 2 parties agree that one's going to keep it, but that person finds out pretty quickly that, maybe they don't have the time or energy or resources to maintain the home, to keep up the payments, to pay the taxes, all that stuff, it just becomes really overwhelming, then maybe you decide on something different pretty quick. It also depends on if you've agreed to refinance and cash out the party who is not staying. So if that is the case, then the person who is staying needs to qualify for a refi. Can you do that right now? Interest rates are kind of high, so I don't know. There's a big question mark there. So there's a lot of things to be taken into account, a lot of professionals to consult, like a real estate broker, a mortgage professional, of course, your family practice attorney, before those decisions can really come into play. Question number 3 is, how do you split a house in a divorce? So similar to question 1 where a judge decides, this is when the 2 parties actually decide themselves to sell the house and split the proceeds. So what would happen there is you put your house on the market just like any other transaction, and then at closing you would instruct the escrow team or the attorney who's closing the transaction, depending on what state you're in, how the proceeds are to be divided. If you live in a community property state like I do, I'm in Washington state, then it's a 50-50 state, and usually the proceeds are split 50-50 unless agreed upon otherwise. So in the case of a judge deciding for you, he would also determine that proceeds to be split 50-50. If you and your spouse decide to sell your house on your own, and you agree upon that, maybe you agree on a different split other than 50-50 depending on your circumstances. So it's whatever you agree upon goes into your settlements agreement, and that can be what the judge orders because you've already agreed on it ahead of time. This applies to homes that have a mortgage, and this also applies to homes that you own free and clear. It doesn't matter if it's got a lien against it, it just is what is left over at closing to be divided, which is a really easy segue into question number 4, which is what happens to the mortgage when you are selling a house during a divorce. So it doesn't matter whose name the mortgage is in. When you sell a house, likely you're going to sell it to a buyer who is going to get their own mortgage. So what happens to your mortgage is it just gets paid off at closing. So say you are selling your house for $500,000 and you owe $300,000 on your mortgage. So you have $200,000 there to play with after fees and taxes and all that stuff that happens during a real estate transaction. Maybe you have like $175 left over, maybe $160, depending on a bunch of stuff. So now that amount, the $160 that's left over in proceeds, now that's going to be divided. So same as the previous question. Now we're paying off a mortgage ahead of time so that anything left over is not subject to the split of the proceeds at closing. Here's a really good question. Number 5, what if the home was purchased by one of the parties prior to the marriage? So this takes into account whether or not you had a prenuptial agreement. So if you did, the circumstance of what happens to that house would likely have been written in there ahead of time. If you live in a community property state, this is where it gets a little sticky, because even though it's considered separate property by one spouse and it's not joint property, the spouse that's not on the title or the spouse that didn't purchased the home prior to the marriage may still have to sign a release of interest at closing. You're going to want to consult with your attorney, and you're going to want to consult with the escrow team who's closing that deal for you, just to be sure. I've seen parties where, one spouse bought the house prior to marriage. They're married for 20 years. The second spouse never went on title. They never quit claimed them on. So they never had any on paper legal interest in the property. But because it was a community property state, escrow still required that non-title spouse still sign a release of interest. And the number one reason for that was actually to cover escrow's rear end, kind of a CYA thing. So there would never be any question as to whether or not who had legal interest in that property when it closed, and so that it would never come back as a title claim afterwards. If you don't know what any of that means, that's okay. You can reach out to me directly with my phone number and my email, and I'm happy to explain it to you. I can explain it to you from the context of a community property standpoint, like we are here in Washington, and give you expectations of maybe what to expect in a non-community property state as well. I mean, it's easy to assume that those outcomes might be opposite, right? I also need to say that anything in this video was not to be considered legal advice. It's really, really important that you consult your family practice attorney or your real estate attorney as to what to do with your real estate assets during a divorce. That's always paramount. And then when you're ready to move forward at that point, you get your mortgage professional involved and your real estate professional involved to help you through the process. So if you like that video, go ahead and give me a thumbs up, tap that little bell so you're notified every time I drop a new one. This is my phone number and my email. Please feel free to reach out if there's anything I can do to support you. See you on the channel.